Hey, Danielle.
Hello, Ruth.
Hey, agents. Good to be seen. I won't say see you because, of course, I can't. Today, we're talking about what's really going on in the market, and I think it's, we talk a lot about this, but it's our job, it's our sacred duty to make sure that the public understands all of this stuff coming at them all the time. Um,
There's a
so
lot of, there's so many uh, resources out there, reputable and not, who are all fighting for the same eyes, the same clicks, the same cachet,
hearts and
whatever
minds, yeah.
out there. It's the coaches, it's the mentors, it's the inmans and the special, the people who are real estate professional. It's the business professional type of situations out there. And everybody wants that headline that'll get more clicks. And we see, and we understand everybody's market's different. But these overall, especially when you're talking and spending time and agreeing with national numbers, especially when it's negative, I think you're missing the mark. I think
Yeah.
you're driving the wrong thought process on.
It's really important. So our team puts together market reports for our areas based on InfoSparks, which is available in our MLS, with all of the data specific to our whole MLS, but then you can drill down in tons of different ways to look at it. And so we give people the actual numbers so they understand what's happening in their backyard.
And correlate it to the past or things, a timeline, be it a year, couple years, months, so they have a little bit of understanding where we're coming from, that we're not making numbers because up.
Exactly. And we show the charts so they can see that it comes from, from a source more reputable than just a person who's looking at this, because that's what a lot of it is, right? Now, we do add our experience and what we're seeing and hearing and all of that so they get some context. But we give them the basic numbers. So we usually go through numbers of houses sold, number for sale. And as you say, we compare it to last month, we compare it to last year. And then the median price and months on market, right? Months of inventory. So we think those are really good metrics for people to get a sense of the market. If you're looking for what do I share, it's overwhelming when you go into those programs and you see like 9,000 data points, right? But it can be really powerful to show the visual. Sometimes I'll pull a chart and show that as well, and just help people understand what the reality of it is. Most of the time, they're not reading past the first or second paragraph of these articles that are touting doom and gloom. I would say that everybody I've talked to in the past 4 or 5 weeks has said, "Oh, how's the market? I hear interest rates are whatever, going up, coming down, staying flat." They're very focused. All of the public is very focused on interest rates. Well, interest rates go up and down.
And let's be honest, they're all correct. It depends on what you're looking at. Are interest rates up from 6 months ago? No. Are they up from 3 years ago? Yep. But that's our job to know those differences, know those numbers, the data points, things like that, so we can accurately be, providing information. We have to be information givers. We have to have the information.
And I think that people think, even some realtors I've talked to have felt like the logjam will be freed up when interest rates come down. I don't believe that to be true. I think it's going to bring all of those buyers back. We know we have a supply and demand issue. I think we as realtors really need to focus on the supply side and make it easier for sellers to sell. Why aren't they selling? A lot of them are just really stuck on the interest rate that they have. They don't want to give that up. And they're not even looking at how it could be equally affordable. if they took all of the equity in the house that they're in and put it into the house that they want to move to, they might have a higher rate, but it's going to be on a lower balance. If they paid off other monthly debt that they carry, people could pay off sometimes bills that cost them $1,000 or $2,000 a month that are not their mortgage.
And 15% or 19% or 9.5% or whatever it is. You have to look at that too.
Yeah. And people look at it as, oh, well, that's a different kind of debt. And you're taking equity, which is good debt, or mortgage debt, which is good debt, and applying it toward something else. Well, what about just the reality of what they're paying every month? Sometimes that's what needs to be looked at. They're not in a good financial position if their debt is super high and all of their assets are locked up into one. So think about some different ways that it can be made easier, that it can be made to make sense. Because another thing that we find is, people don't want to be wrong. Even if everybody else is. I remember back, years ago when we started this, Danielle, and people would talk about being underwater in their house. And my reply was always, that's a really big boat. There are a lot of people in that boat with you, right? And people were so relieved to hear that, because they thought that they'd done something wrong. They thought that they were wrong. They thought they made the wrong choice. They thought they bought at the wrong time. We want to encourage people always to buy when it's the right time in their life to buy, to sell when it's the right time in their life to sell. And I think there's a lot of people right now where it's the right time for them to sell, and they're not doing it for other reasons that probably don't make sense. So let's have those conversations as their trusted advisors and help them do that, right?
Absolutely.
And look at those scary headlines and figure out how to turn them into a reality that makes sense for people.
Yes. So get out there, know that data, look past those headlines. And when you look at those headlines, go and look at your local information and see if that's, accurate. Or, as Ruth and I were talking right before we got on today, another realtor, kind of shared a doom and gloom bit of information, and it was skewed. Something doubled, foreclosures doubled, but they were at near record lows. 10 years ago, 15, 20 years ago, it was still higher than that. So yes, it sounds awful, but that gives everybody the wrong impression. Now, am I going to say it's going to start going down? No, but it's still not at these levels that, once again, has people going, wait, maybe I won't buy. Maybe I'll wait for all those foreclosures in the neighborhood I want to be in.
Yeah. And the other thing is, sellers are waiting, and we don't know for what. So markets turn, they change. We don't see prices coming down soon, but they certainly could. Something could change that. And then we're going to have sellers back where they've been before, where they want and there's places in the country where this is happening right now. We have colleagues in Texas and Arizona. They're seeing price decreases. Now, whether those continue through the spring, we won't know. But they were kind of over flooded for a while, and the demand is easing off in those areas. So you end up then with sellers who are like, but I could have made. Yeah, you could have. So let's get them to make that now and carry that with them wherever they go.
Yes.
So if they're going to be in their next house for 10 years, it's really not going to matter if it dips a little bit.
And back in the day, right? But we always talk about markets, what happened 2 years ago is not relevant today. And I think that's the other thing that we have to, I think, could be wrong, but give and take. When we had the crash last time, I think it was kind of thought that from 2009 to about 2011 or 12, the kind of thought process is that you had the traditional sale. That was, everything was good. And then you had a short sale, and then you had a foreclosure. And the short sale was always, I think the number was somewhere around 10 to 15% lower than the traditional resale. And then foreclosures were 30% or so under value. And I think society remembers that. But there's been so many things put into place. First of all, there was things that the banks learned, which is don't put the house with the broken pipes.
Yeah, for
And the
30% under
flooded-
market, you didn't get floors or walls.
Correct. Right. The cabinets were coming in.
Yeah.
So then as the years went by, they redeveloped the way that they handled foreclosures. And you know, a lot of the times if the banks hold on to it and put it to market, they're doing what needs to be done to put it up to market value. So
Yeah.
So this idea that if we start seeing a bunch of foreclosures means that the values you're gonna be able to get a house for $100,000 less than you could have if everything was together. That might not be there. We haven't seen it, at least in our market. We haven't been seeing a ton of foreclosures, so we're not, we're not there yet.
Figured out that they're dumping all of that inventory partially caused that vortex. And that didn't help them in the long run. You know, if you've got 3 or 4 houses in an area, maybe that works. But when they had the volume of houses, all it did was put downward pressure on them. And they figured out how to, banks are pretty good at figuring out how to protect their financial interests. It took them a little while, but they figured it out. So that's not going to happen again.
Nope.
So the government put a lot of protections in place too. So
exactly. But if you guys are seeing, if you're somewhere that you are seeing more foreclosures or more houses in distress, what are those numbers? Are you starting to see a pattern? Are you seeing foreclosures that are market value? Are you seeing them back to 10, 20, 50? Are we wrong?
But also, let us know about that, but also have conversations with people in your area then. If you're seeing, an impact, see if you can get ahead of it. See if you can help people. See if you can have those conversations before it's too late. Damn, that sucks.
But I'd like to talk to you guys. I'd put a comment in if that is the case, because I would love to learn. I would love to know what's going on in other places to see if that same pattern is happening here.
Yeah, we're not seeing it at all. But if you are, let us know.
And that's why you can't use national data.
Exactly.
Because what's happening here is not what's happening in another state or another area.
Yeah, well, like we say, even my market to your market, which are, it's a 20-minute drive, but makes a difference. All right. Thanks for tuning in, and we'll see you next week.
See you then. Bye-bye.